Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. Okay, let's see here. Semi-surge after the Warsh Fed day debut. Okay, well, that is the strongest sector that is leading this market higher is still the strongest sector, even after rate hikes are assumed for this year. Okay, we'll get to the semi-surge, but first we're looking at a picture of the S&P 500. We're up, but it's not confirmed that we're at new highs yet. Okay, we are still in a meh market. You have the narrative that could be good for the bears, and you have a narrative that could be good for the bulls. Okay, we have confusion here in on the SPY. Okay, so let's get to the semis and everything and what I think going forward. But first, we always talk about the technical picture. We bring in the moving averages, guys. Still bullish above the upward sloping 50, and we haven't even touched it yet. So this market, technically speaking, is bullish. We don't have to go much further. It's just as long as it stays above the 50, we're going to be bullish. Okay. Today was up X, so we did have some kind of volume, and maybe that kept the market muted. But basically, the upward technical trend continues. Okay. So what does the sentiment say? The sentiment in the fear and greed index is still fear. We have plenty of room to go higher into extreme greed. The market's at greed because we're close to highs, but everything else is down. Even the breadth is at extreme fear because like we said, we have basically semis and big tech riding everything, and everything else is pretty much muted. Okay, and a lot of bearishness still out there. Okay, so same thing as yesterday. We still have a lot of fear and a lot of pent up demand waiting for the market at near highs. So this is very good for the bullish cap, okay? And today is Thursday. Yes, it's the end of the week, and we get the AAII investment sentiment survey, which I like, and the bears are down to 39%, okay, because the market's close to highs, but still 39%, and the bulls are back at 36. However, if you look at it, 36 is less than average. It's below average, and we're still above average on the bears. So the bear sentiment is still out there. It's going to take a while to kill them. Remember, we need 4, 5, 6 weeks of down to here, 20%-ish, 20, 19, 20% for weeks. That will solidify the move going higher. This is why I think because of the craziness and the mixed emotions, the breadth is down, but momentum is up. Semis are leading. This kind of mixed fear and I don't know what's going on is very, very bullish. Okay, when there is confusion, you go with the trend, which is long. Okay, when you have mixed messages, all these bad news coming out like the breadth, whatever, okay, yet semis still search the highs, okay? So before we get to the semis, we had one print in the macro world, initial claims every Thursday, 226,000, nothing. We're in the middle of the range, nothing's happening. Again, good news. Let's not dwell on it. We're not getting any kind of unemployment spike. So yeah, good news fundamentally, good news technically, and good news with sentiment, okay, meaning that we can still go higher. So semi-surge after Warsh, okay? So if you look at CNBC today, the headline is Vance says the U.S. isn't giving Iran a cent as he defends Trump. But here, this is what we want to see. Markets are set for a much more hawkish Fed than expected, okay? Because of the meeting yesterday, we talked about it. He sounded hawkish, mainly because I don't think so. I think he sounded fairly like he's going to make changes to the inflation metric. He's going to redefine how inflation is measured, which is dovish. But he says we are trying to defend inflation, which means everybody took it as a massive hawkish move, okay? Very, very tough to be hawkish and raise rates when, the war is over and inflation is coming down. But we'll see. We don't know what's going to happen with Warsh here. We do know that the market thinks it's very, very bad because interest rates are higher. However, the mixed messages is that semis are still at all-time highs. Doesn't affect the semi market. Okay, so let's go to the FedWatch tool again. Okay, this is the FedWatch for all of December. We're expecting, forget it, 13% chance for nothing. Okay, everybody's expecting a hike. 86% chance for a one hike. 36% chance for one hike. 34% chance for two hikes. 3 hikes and 4 hikes. 1% in. There's no way there are going to be 4 hikes. Okay, and if you look at the next meeting, which is in July, we're not going to raise in July because we're standing pat 61%. Maybe that changes, But in September, they think the first hike is coming in September. So 3 months, first hike. Okay, and I assume the next would be in October. Nope, by December. It's iffy. One for sure, coming in September, they're saying. More than likely, not for sure. More than likely. This has to go above 67% before it's a done deal. Warsh will do whatever these guys say. Okay, it's the same as it's a new, say hello to the new boss, same as the old boss. Okay, I don't think that's going to change. However, okay, this is as of right now. If we have oil continue to go down and inflation expectations go down, because again, if you look at the US 10-year, we looked at the FedWatch tool, but the US 10-year was down today. It's not going above this. It's not even at the danger zone that it was before. It's not even after the meeting. It's pretty much muted. So you're having the US 10-year not a big deal, which mixed messages. You have gold, which is a big deal. It's down past 2 days, Warsh and after Warsh. So it's down today. I don't know if it's going to continue to go down. And you have oil basically down from the war, okay, and flat today. I mean, it's down a lot, so it's probably digesting today before going down more. So let's go to the main event, because you have mixed messages in gold, okay, because gold is down, and yet the markets, based on the semiconductors here, the semiconductor index is up, okay. If you were short yesterday, if you went short thinking that, we have some negative divergence, and we still do, okay, or that it's getting too high, high interest rates because of the Fed are bad for tech and for semis. Yes, you are correct. However, if you went short here, the price action says you're wrong. Okay, you have to get out. Okay, and I have a position in Intel, and it's new highs after they announced some earnings here. Not earnings, a partnership with Apple. So it's up to new highs. Okay, it too is negative divergence, but that could get played out if it keeps going higher. Okay, so we don't really care about the RSI here as much. I was hoping it would go down, but if you want to look at the MACD here, we have a crossover, so it could continue to go up. Okay, you don't short something that goes to new highs, and I'm going to cover my loss here very, very shortly. SMH, exactly. If you were short here, you better cover now, because if you are correct, it wouldn't be making new highs if you're short. Okay, so this semiconductor space is super strong. This is what's driving SPY. Okay, SPY would be much, much lower if it wasn't for the semis. Okay, so you have here like mixed messages. You have the bearish view where it's a lower high still. It hasn't gone to new highs. This is why I refrain from being super bullish until we get to new highs. Okay, but I think we do, because we mentioned before, mixed messages eventually lead to the continuation of the trend. Again, we're getting mixed messages. Gold is down. Gold shouldn't be down if the semis are up. Okay, if the market is doing well. If everything is doing well because they're brushing off rate hikes, gold should be brushing off rate hikes too. Oil, should be down too, even more. So these mixed messages is what's driving this, is going to drive this market higher. I don't know how it plays out. I don't know what the path is towards quote unquote higher, but I think we are positioning ourselves for a move higher. Okay, even though I didn't get my extreme fear. Okay, so you have to be cognizant of the fact that right now we are in no man's land. However, the trend is still bullish. Okay, so if you were to place your bets, you have to go with the trend. Okay, this is what's all about. So semi-surge after Warsh, the SMH is telling you guys that not time to go short yet. You were wrong here. You were wrong after Warsh to go short. Okay, if you took a short after Warsh, cover your butt. It's not, you're wrong. Okay, so you didn't lose that much, but it was a logical short. Okay, you had negative divergence, you had the Warsh becoming, you have all these like narratives playing, but then the price action is telling you that you're wrong. So you have to get out. Okay, so we have the strength in semis. We have the not so much strength in the SPY. Gold, we have weakness. Okay, unless it finds a lower high here and it goes higher. You know what I think? I think gold goes higher in the weeks and months to come because of the extreme sell-off here. I don't know how that plays out. Okay, higher rates is not necessarily bad for gold. We've seen rates go higher between 2003 to 2008, and gold was ripping. Okay, so it's not necessarily bad. It all depends on the other factors as well. Okay, because gold is up here because of central bank buying mostly. Okay, there's other factors going on. You can't just look at one thing and just say, oh, gold's dead. Okay, so and U.S. oil, you know what I'm saying. I think it continues to go lower. Maybe a relief bounce, but I think the trend now is broken, and it's going to go lower. It might retest the neckline at 79 before going down. Who knows? But I don't think that the oil market is going much higher. We're going to have a flood of oil coming in. Okay, so let's reiterate. The theme of today is the confusion, the mixed messages that you're getting in different markets is a bullish signal. You go with the trend. Okay, if the trend were down and you were getting mixed messages, you would still go down. You would be looking for ways to short. Now you should be looking for reasons to go long, especially the semiconductor space. That's what's working, so you have to go there. Everything else is pretty much muted. Okay, and I expect if the market goes up, the semiconductors might give up some of their shine, and other sectors will join in. We haven't decided. Well, we haven't decided. We haven't seen that yet. Okay, but I suspect that's what happens going forward. All right. So that's it. The semi-surge after Warsh. Stick with the sector that works. Okay, if you're wrong, if you shorted on logical, you were logical. You were very logical. You were very logically based to short after Warsh, and seeing some momentum sliding. When you have negative divergence, it's like almost upward momentum is slowing, and you had the FedWatch rate hike expectations increase, but price action just destroyed your narrative. Get out. Okay, and we mentioned the mixed messages is the key here. Okay, mixed messages is good when people are confused, they don't know what's happening. You go with a bullish trend, because if everybody was on board that everything's amazing, I don't care about everything, just buy, then you'd be in trouble. Then I'd be in trouble. I'd be looking to sell if I was long. Okay, but right now you have to go with it. Look for any pullback in the strong sectors to buy. Okay, that is my opinion. Okay, all right, guys. Let's see next week what happens. We're going to get inflation numbers next week. Let's see what happens. Okay, let's see if they go down. Maybe the FedWatch tool will adjust in that case. Who knows? Okay, it's a very dynamic environment, right? Okay, later.